I'm Shelley Kohan, Associate Professor at the Fashion Institute of Technology in the Fashion Business Management Program, which is in the J. and Patty Baker School of Business and Technology. And we're here today with a rare opportunity to learn from one of the fastest growing companies in the U.S. market, Sezzle. We are so appreciative of Sezzle's support in working with us on a live case study that will have a profound and lasting impact on our students. I want to thank Sezzle and CHarlie Youakim for their contributions and interest in supporting education for fashion students. We'll start by asking CHarlie to tell us about Sezzle. I will then ask some questions at the end of our conversation, and then we'll have a few students also come back and ask additional questions. So let's get started. CHarlie, can you tell us a little bit about your own background, and then tell us why you started Sezzle and what the company is all about?
Sure. A little bit of my background. I'm what you'd probably call a tech co-founder, with heavy on the tech. Growing up as a kid, which a lot of people in the classroom here are that age, I was probably what you'd consider like a nerd. Spending a lot of time working on building my computer, playing video games, software development. I was always interested in engineering, so I went to undergrad as an engineer at the University of Minnesota, and I just totally loved it. But when I came out of school, I actually went into software development just because it was what I kind of just felt was right for me. And I worked at a company that did solutions for parking, of all things. Once you enter the workforce, I guess you'll all find out there are tons of companies doing tons of different things. And I entered the workforce doing parking software. And I worked my way up in that company. And then eventually kind of felt like the end of the horizon and wanted to expand my possibilities in business. And that's when I went back to business school. That was 2008. Spent a couple of years getting my MBA, which I totally loved. And then that was the time period where I basically started to move towards the entrepreneurial side of my career. It was the downturn in the economy. It was tough to get a job. And I kind of viewed that as like the push out of the nest. And at the time I was, my background was in parking. I was parking at a parking lot where you had to pay with cash and write your license plate on an envelope to pay. And I called my cousin and I said, hey, there's an opportunity here for us to start a business, I think, because there's a lack of technology in parking. And that was the genesis of my last company, which was Passport. And we built that company, scaled it up, learned all the ropes, all the hard way of scaling up a company and making it a successful one. And then moved on from that company. Actually, I was pushed out, which I think is a story all of itself. I was pushed out of that company 5 years later, and then didn't love anything else except for starting another company. So I reached out to my co-founders at Sezzle, and that's where the start of Sezzle came about.
Wow, that's really interesting. That's a great background for us. Tell us a little bit about Sezzle.
Yeah, so Sezzle, if you think about Sezzle like shorthand, I say think PayPal, but with micro installments. So users create accounts with Sezzle, and every time you check out online, typically online right now, but it's probably going to go in store. But right now, when you check out online with Sezzle, you put your payment method on file with us, and every time you check out, we split a purchase into 4 equal interest-free payments. It's super consumer friendly. So if you're buying like this jacket for $100, you pay $25 today, and then in 2 weeks, 4 weeks, and 6 weeks, we automate the rest of the payments. And the goal is to make the product free for the consumer, as consumer friendly as possible, and in that way drive adoption from consumers, and it also just feels good to make a really strong consumer friendly brand. And then what we do is we actually charge retailers for the service fee, because we drive sales lift and increases in average order values, increases in conversions. So that's the business as a whole. It's really exciting. We have pretty fantastic growth as a company, and we're right in the upper stages of that growth spectrum, which is really exciting to take part in.
Excellent. Thank you for sharing that.
I've got a presentation, Shelley, by the way. Let me know when the right time to step into that would be, but I can step through and walk you through step by step about why we exist and what makes our product work so well in today's environment.
I think now would be a great time to walk us through the whole story.
Great. Let me step into it. So as I mentioned, Sezzle, we were founded in 2016, and we were founded, we actually had a different business model, but over time we evolved into the current model that I just explained. And when we did that, we wanted to set a mission as a company, and that's when we developed this mission, financially empowering the next generation. I think that's a great idea if you're creating a company, to set a mission on top of everything you do, because as it's like your North Star as you're building the company. And so you'll see as we go through the presentation here, everything about the company really points to this North Star, our mission of financially empowering the next generation. And if you take a look, I explained it in a little bit of detail there prior to the presentation of what we did, but if you take a look at the video here, it'll kind of show you what we do. At $25 today, week 2, week 4, week 6, 0% interest, no impact to credit, instant approvals. And it drives significant results for the retailers that adopt our product. A little bit of background on when we started and where we are. We were founded in 2016, based here in the Midwest in Minneapolis, which is another, I think, funny story in founding companies. Many people have a high degree of doubt that you can actually create a successful company outside of the coast. But I've actually built 2 companies that are pretty successful, one in Charlotte, one in Minneapolis. And I think all you need you need a great idea, you need great people, and you need capital. And there are plenty of great people outside of the coast. So we've got 3.7 million users that have signed up for the platform, nearly 2 million that are active on the platform. We've got over 20,000 retail partners. So we're, just by that count, you probably understand we're primarily skewed towards SMB. But we are working our way up into larger and larger enterprise clients like Target, for instance, who we're piloting with right now. And then we're a publicly traded company on the Australian Stock Exchange, which is a little bit unique. And we, if we get into the Q&A, we can explain why. But I can tell you, like, the quick point there is that we did it because investors in Australia understood the product better than investors in the US. And so we went where the belief was the strongest. And I'd love every minute of being a public company as well. And I think also noteworthy is that we're a public benefits corporation. So to that mission of financially empowering the next generation, we have that guiding light, but then we also follow something called a stakeholder approach, which is really, I think, what the Public Benefits Corp points to more than anything. And the stakeholder approach means that instead of pushing for bottom line profits, as a company, we identify our key stakeholders and we try to win for all of them. So the key stakeholders for us are our merchants, our consumers, our team, our investors, and then the community. And what we want to do is we want to measure our impact to all of them and then push our results to the top for all of them, which is tough to do in some scenarios, but that's, I think, what makes being a public benefits corp so rewarding, is that when you do all of those things, which is basically aligning with that viewpoint, that you do eventually just drive profits anyway. It's like a byproduct of doing all the right things. So why do we exist? So the primary reason this Pay in 4 product, this installment product that Sezzle has, is doing so well is because of a lack of access for millennials and Gen Z towards traditional credit products. There's a bit of lack of access, and there's also a bit of wariness or fear of credit cards. So those are the 2 drivers. And what we've seen is we've seen a push to debit cards in those groups, in millennials and Gen Z. These are some of the stats around the decline of credit cards. 30% of millennials don't have a credit card. 67% of millennials have a sub or non-prime credit score. And 87% of those consumers want a way to pay over time that's not a credit card, which is why you're seeing this rise of the installments in today's economy. These are some stats. The next few pages are going to be full of stats that I think are really powerful and speak volumes about why our product is doing so well. So these are the changes in payment methods over that 15-year time period before we started the company, from 2000 to 2015. And what you can see is this massive rise in the use of debit cards. And obviously checks are becoming antiquated. Probably a lot of people in the class have never even used a check. But debit cards are the big story here. And you can see that even in more recent times, debit cards continue to rise in preference over credit cards. And then this stat, millennials are 2 times as likely to rank debit cards as their first choice of payment over credit cards. So all these basically keep on pounding that in. And I think the reason you should care as you enter the world of fashion, the world of retail, is this. The average value of a debit card transaction is $36, and the average value of a credit card transaction is $72. And so this rise of debit and debit payments has been a real problem for retailers. And so that's what Sezzle does in a way. Is what we do is by creating this interest-free installment product, we creditize people's debit cards. And we do it in a way that's very safe. Whereas when you utilize a credit card, you can get into a lot of trouble. You can spin up a balance that you can eventually not be able to service. You just can't, you have a $2,000 bill and you just don't know how you're going to catch up. With our product, what you really see in a lot of the reviews is it's utilized for budgeting. Consumers have the idea and the concept that I'm going to make a certain amount of money over the next 6 weeks. And I know I can make this purchase for this $100 jacket today because I know that I have this income stream coming in. I just want a tool that helps me parse it out and split it up over that time period. And then if someone gets in trouble with our product, say one of those payments fails, we stop the access. So the customer can't get into that debt spiral. They're stopped. They've got to catch up before they can start to utilize the platform again. And that's really one of the keys to how we help young consumers with this credit product. So again, some more stats around the decline of credit cards. I just thought those were interesting. And the one that I think is really interesting for retail is private label credit cards. So this is the gap in participation rates between Gen X, which is my generation, and millennials. And I think it's even deeper as you go to Gen Z. And so this is at the same stage, same age. So it's not like my age to a 20-something. It's both Gen X at the same age and 20-somethings to millennials. A 23% drop in private label credit card usage, a 22% drop in credit cards, and other credit products. And so one question is, why did all of this happen? And in my viewpoint, in our research as a company, what we always point to is the Card Act of 2008. That we believe that changed everything. And what changed in that Card Act was it was made illegal for credit card companies to market on college campuses. So when I was going to the University of Minnesota, when I went to McDonald's or Subway, as I was walking there, I would basically be confronted by 10 credit card companies trying to offer me a free credit card in exchange for getting a t-shirt or a free lunch. And I signed up for my credit card. I got it. I used it successfully, helped myself build my credit score and got free time value of money. But some people used it unwisely. They maybe paid for a couple of spring breaks, didn't have the job to support it, got in financial trouble, and it maybe led to early bankruptcies for young consumers. And so in the downturn in the economy from 2008 to 2010, our government was trying to fix some of those underlying problems. And they thought that young consumers were probably getting access to credit cards or getting pushed credit cards at too young of an age. And so now if you're age 18, 19, you can still get a credit card, but your parent will either have to co-sign or you have to have proof of a full-time job. And so what changed here is, if you think about that, so this happened back in 2008, 2010, every generation of young consumers that entered college after that had a delayed use of credit cards. And so credit scores were depressed. By the time you probably had access to a credit card, you had your first full-time job. Your debit card's got a lot of power now, not more than you're ever used to. So you still don't need a credit card. And then when you finally need access to credit, you just don't have it because you don't have the credit score to support it. And so that timeline, or years after years, new cohorts of young consumers coming out, has had a big impact on access to credit. And that, I think, is what caused this rise of the debit card. And this chart, I think, is really powerful as well. It speaks to that delayed credit score for younger consumers. If you look at consumers under the age of 30, I mean, look at the average credit score breakdown. The vast majority of consumers are under 620, which is basically considered subprime, and 620 to 680, that's another subprime bracket. So the vast majority are in the subprime world. And I think this is powerful because what differentiates this bracket of consumers from, say, this bracket besides age? I mean, nothing. The same character and quality of consumer exists here, as does here. And what it really is just experience and data. And our viewpoint as a company is these people, these young consumers, are getting mischaracterized as non-payers, if you will. And so our product fits really well into these segments because we've designed the product to give young consumers a chance to open an account with us, given us a small access to a line of credit, and then through their behavior in our product, we can give them more and more access. And this is just a funny stat I thought that I'd share with everyone. Young consumers fear credit card debt more than death, which I think tells you a little bit about the attitudes towards credit cards too. It is scary. You know, you can spin up that balance that you can't service, and then that could lead to a bankruptcy. So I could see how for a young 20-something, you know, that's definitely gonna be more scary than dying because you're probably fearless, which doesn't surprise me. So our product, in a way, you know, what we've done is designed it to support responsible financing. Many times, to a lot of people, I talk about how we're training wheels for credit. And there is a strong aspect towards budgeting in our product. You can see it in our consumer reviews, which I really welcome you to go check out on Facebook, Trustpilot, Google Play, and the Apple Play Store, or the Apple Store. Take a look at our reviews and you'll see consumers talking about budgeting. And I love that because it talks about how this credit product is being used towards responsible financing. And this is what it looks like. I showed a little bit of a preview at the start, but what we do is we talk with our retail partners like Orca, and we mention to them that we tell them the story about the debit card usage on the rise and what that means for them, which is very impactful. And we talk about integrating our product on their e-commerce websites to drive a difference for them, both in terms of average order value lift, conversion improvements, and increases in sales. And what we do is we charge merchants typically around 6% to process the payment, which is 3% more than they would pay otherwise. So it's really only an extra fee of 3%. And we get advertisement with them. We work with those retailers and advertise our product on their product pages. So you're looking at buying the Seafoam cooler at Orca, and right below it, right below the price point, which could put a few people off, we let consumers know that you could pay in 4 interest-free installments of $25 with Sezzle. And that's really how we get placement and education with consumers. Then we have a really easy account sign-up process. You know, just like many other wallets, we'll ask you for some simple information about yourself. Mobile phone number is a key identifier. We'll ask for your name, data. That does come from the merchant as well, so we can speed up a lot of this checkout. And then the key item is we ask for a card to make the payment. 90% of our payments are made on debit cards, which completely matches up with the data we showed earlier. And then we present the payment schedule, and then that's it. You can complete your order. Really easy. What we pitch to the retailers that we partner with is access to younger consumers and conversions with younger consumers. So as our user base is growing, we've got, as I mentioned, nearly 2 million active customers. The vast majority of them are Gen Z and millennials. So if you're a retailer trying to get access to a younger consumer base, we're the type of product that you should be looking at adding, because we can drive that user group towards your retail site. And this is just some of the growth metrics that I mentioned. This is a little bit out of date. We had a more recent announcement as we approach 2 million active customers. And these are some of the names that we're working with. The big names, obviously, there are Cabela's, which is also Bass Pro Shops, and Target, who we've got a pilot with now. And this is just, you know, some more data about subprime and the invisibles in different credit generations. And also debit card and credit card usage among lower income demographics. And this does match up with age as well, as everyone can probably imagine. When you're just entering the workforce, you tend to be in the lower income brackets. And those users are typically utilizing debit cards instead of credit cards. And then as you start to get to higher income brackets, you can see that credit card becomes the more favorable payment method. This also lines up with our data. And that's basically it. So, I'd love to open it now up to questions, Shelley, if you have any questions, or if any of the students watching have any questions.
Yeah, well, I'd love to ask you a few questions. First of all, that's a very impressive story, especially your finding of previous business before you found Sezzle with your business partners. And starting a business is absolutely difficult, especially when it's time to scale and grow. So one of the questions I have is, can you tell us a little bit about how your company was able to grow either through organic growth or traditional acquisition method?
I always recommend a young founder focus on organic at the start. And you don't have to be a big deal at the start of a business. I think that's a lot of times what I see, a common mistake I see with young entrepreneurs is they always want to go right for the top right away, like selling to a Target or a Walmart. That's the last place you want to go. And then I'm just talking to our sector, but that's a lot of times what I see in with young companies or young entrepreneurs. And the analogy I always give is I hike the Grand Canyon. And when you hike the Grand Canyon, you look across the Grand Canyon and it looks impossible to go across. I don't know if anyone's done that. But when you start just taking it one step at a time, what you'll find is over time, you're making it across. You have no idea how you're doing it. You look back, you don't even realize how you got to where you are. And then next thing you know, you've crossed the Grand Canyon. So it's really taking it one step at a time. And that means doing things organically. And so both at Passport, my prior company, and at Sezzle, we started with small retail partners as our first customers. We reached out to these small customers because they're more flexible. You can have deeper conversations with them. They can give you better feedback on your product. And it creates a great, if you will, testing ground. And those smaller customers also are willing to do the trade-off because they know that they have better access to you than they would with a big supplier. And so it creates this very strong symbiotic relationship. And that's what we did at Sezzle. We started with very small retailers. We reached out to them, we got the product installed, and we worked with them on improving it. And what ended up happening is we got better and better and better. And that organic growth just starts to snowball and you speed up. Because as you get better and better, now your product is better suited for mid-range clients. And then you start to get momentum with them, which attracts even more SMB clients. And then eventually now we're piloting with Target. And now that we reached this pinnacle client like a Target, our product is functioning at a very high level. So we're not even that worried about this pilot. Personally, of course I want it to work. So I'm worried in that reason, but I feel way more comfortable launching today than I would have 3 years ago. So I would always push for organic. I think it's the way to go.
That's great advice. Wow. So one of the fun things I do, is kind of a geeky thing, is I love reading quarterly and annual reports. And I must say that the Sezzle Q3 report was quite impressive. Your underlying merchant sales were up over 232%. Not a big surprise because you've had this steady rise since 2018. Your active users that you mentioned earlier, close to 2 million. You have almost 21,000 active merchants. Where will the growth come from in the next year to say 3 years, and how will you scale to grow the business?
Well, there's still plenty of growth in the SMB sector that we're present in. For instance, we got 20,000 active merchants on the platform, but Shopify has well over 100,000 merchant partners, and I think approaching 200,000, and maybe well beyond that. So there's a lot of room to grow in the SMB space still. But for us, there's just way more room to grow in the mid-size retail segment and also enterprise, which is basically untapped at this point. If you look at it, we have nearly 2 million active consumers at this point. I would call these younger consumers the early adopters. And there are nearly 400 million consumers in the US. Half of them maybe are in any way a target because they're either children or retirement age. But of the working folks out there in the US, look at 2 million active users, and there's probably maybe 250 million addressable users in the US that could potentially use our product. And that's just in the US. We have much more room to grow internationally as we're testing out new markets. And then finally, we could also start to add more product extensions, which I think is always a smart move for an entrepreneur. As you're starting to get your base product working, are there slight adaptations or extensions to your product that you can add on to open up even more revenue opportunities? So I think there's plenty of room to grow.
That's great. So I know a large portion of your revenue generated at Sezzle comes from e-commerce and the e-commerce channels. What's been the barrier to deploying the Sezzle solution across brick and mortar retailers? And does that newly launched Sezzle virtual card or direct POS integration, is that going to help you dive into physical retail?
Well, first of all, that's going to help us dive into physical retail, most definitely. So that virtual card, what's really cool about it is you can add it to your Google Wallet and your Apple Wallet with just a tap. So I think we're going to start to see the death of the physical card over time. I know I use my mobile phone to tap and pay almost everywhere I go. I mentioned we were listed in the Australian Stock Exchange, so I go to Australia quite a bit. In Australia, it's tap everywhere, it's just awesome how great their payment systems work. That's coming to the US, this tap anywhere. And I think what's going to be happening is you're going to have to see cards go virtual, and you're going to be embedding them in mobile phones and just tapping wherever you go. So I think that makes it easier. Our virtual card makes it possible. We still prefer online. And the reason I prefer online personally is just the pitch is so simple, and it's always clear and concise and repeatable. So when we put our pitch up on the product page or up on the card page, every time we present that widget and the pop-up box that explains our business, it's always the same message. One of the problems you have with in-store and offline retail is, how do you educate the customer? Because they're going to come into the store, they may see Sezzle, like a billboard for it. They may just see a logo and they ask someone like a clerk about how it works. And one of the concerns is the message going to be delivered correctly? I think that's a big one. And then how do you make sure it is? That's really costly. Like, you've got to have a team that goes out, talks to the world about how your product works. So I think we've stayed away from physical retail for some time, just because we wanted to get a little bit more penetration and more word of mouth through our online channels. We wanted to go to in-store earlier this year, but the next hurdle for us was COVID. Right when we were starting to launch some pilots, basically everything shut down. I shouldn't complain too much, because it was a way bigger problem for our retail partners than for us, but it basically slammed the door shut on our in-store move. So I'm guessing 2021 will be the time we do it.
Yeah, I think on a personal level, knowing the industry a little bit, your timing couldn't be more perfect. Mobile proliferation is going to explode. So you're hitting it at such a great time in terms of rolling out the virtual card. Are there other business expansion models that may work for Sezzle, such as providing payment solution for services, or even a P2P model?
Yeah, we're thinking about those. That's really interesting you brought that up. We're thinking about P2P. Is it a model that fits into our business? So something we're going to be testing and surveying our customer base about. The one that's more near term for us, and I think definitely actionable because it's happening. If you look at our product, it works great for this jacket. You're buying something for $100. It's perfect for that because you can pay for it over 6 weeks. But what happens when you want to buy a couch, or you want to buy a TV, or you want to go out and buy the new PlayStation and new Xbox, which is, start to get like $800, $900 for a purchase? Our product doesn't work as well for that, just to be honest. It can for some people, but not for everyone. And when we started to think about it, one of the ways we could solve for that was offering long-term installments. So it starts to vary a little bit from our simple business model, which I do love that it's simple and it's easy to understand. But we also want to have deliver the best impact possible for our merchant partners and our consumers. And we heard from our merchants they wanted a solution for long term. We know consumers would rather have an option rather than getting turned down. Like right now, if someone's checking out for a $3,000 couch, they're with Sezzle, they're probably getting turned down. We'd love to change that and say, hey, Shelley, we've got an option here for you. It does, in some cases, contain an interest rate, but you're paying for a $3,000 couch over 2 years. So that's typically expected. I don't think it's that big of a surprise. I think what consumers want more than anything is just transparency. Like, I'm willing to pay interest in that kind of scenario because I get it. I just want to know what I'm paying And if I can do that, I'll accept it. And then here's the key for us. We didn't want to do it. That's not our business. We want to stay in technology and payments. So we partner with Ally Bank. That was the big partnership we just announced. And what we're doing is we're allowing Ally to offer installments within Sezzle. So when that user checks out for that $3,000 couch, we can offer a 24-month plan through Ally.
I love, I did read that announcement, by the way. I think that's great. I also love the fact that, instead of taking that on in-house and knowing you probably don't have the expertise required in that field, nor is that where you want to focus all your team's effort, that you partnered with someone to do that for you. I think that's, amazing and great for the company.
Yeah, thank you.
So globalization is obviously a key for success and a diversified business model. And while you're already an international company, I'm sure further international expansion is probably a strong consideration. A challenge to globalization beyond the differences in currency, cultural values, business models, country infrastructures has to be the complexities of banking requirements and legal aspects particular to various countries. Can you talk to us a little bit about the pain points of international expansion from a banking perspective? And then how does this then relate to consumer shopping behavior?
I mean, Shelley, you nailed it. You nailed actually all the aspects of international that are challenging. Regulatory is definitely one of them, and it does change from country to country. The one thing that helps us as a company is that we're on this edge of consumer friendliness that no one's ever seen before. We actually go talk to regulators on a state-by-state basis here in the US, and we've had conversations where they're like, no, really, how does this product work? Like, where do you make your money? And we're like, no, we don't charge interest, and we try to do everything in our power to avoid fees to the consumer. And when we hear that and we tell our story to regulators, it completely changes the game, at least here in the US. Internationally, I think there's somewhat the same sort of understanding. Now, I'll tell you a story from our India team. We just launched this product in the start of July 1st. So the start of the third quarter is when it launched. And what our leader out there, Vandana, she was calling some consumers just to get some feedback, which is awesome. That's so smart as an entrepreneur to do that. So she was calling them. They thought that she was a collector. So she was talking to them on the phone, and she's like, no, I'm not a collections agency. I'm with Sezzle. We just wanted to find out, why such and such was happening. Like, can you give us some feedback? And I love that. We're basically, everyone's zigging and we're zagging. And I think that's going to create some serious word of mouth in India. Like, people are going to tell their friends, like, you want to make that purchase with Sezzle. That company is so consumer friendly. And then that aura, and then that mission around financial empowerment, the Public Benefits Corp, all of those things also help you with regulators, because now they start to see, hey, this is a good actor in the space, and we should applaud this type of work and support it. And I think from our viewpoint, that's going to help us as we internationalize the fact that we're so consumer friendly.
I think that's great. And that's a really good point about the Public Benefit Corporation. I think you're right. I think people really want to help companies that are doing the right thing.
Yeah.
So I heard through the grapevine that you have this keen sense of Gen Z cohort consumer knowledge. And so when I learned about some of the initiatives that Sezzle has rolled out about corporate values, including being more purpose-driven, I think there's a chord that's being struck with both the Gen Z and millennial generation. Tell us about financially empowering the next generation and some of the key initiatives that you're most proud of in the company.
Yeah, the one I'm most proud of is one we're rolling out right now. It's called Sezzle Up. So when we looked at this product, and the mission, financially empowering the next generation, first of all, I think we're doing it with the base product, because by offering credit and that purchasing power, you're doing it. That's the baseline. So we're definitely financially empowering with our base product. But I thought, we talked about it as a team, and you start to think, like, if I had my own kid, I just had a little baby here now, just a couple weeks ago, it was awesome. But if he was 18 years old, what would I be teaching him in terms of, credit? And I know what I'd be doing. I'd be getting him a credit card, and I'd be co-signing it because I would want him to build his credit score up. And so if I viewed that way, have that view towards my own child, why wouldn't we have the same viewpoint towards our customer? And so I think one of the biggest whiffs we had was we were not impacting credit, but we weren't helping credit scores. So we viewed that as a big area of improvement, and it pointed to our mission. It pointed to being a public benefits corp. Everyone in our space that we're competing against is anti-credit. We're not credit. We're not credit. We're not credit. We actually see the reverse. We're like, we are credit. Because first of all, we are credit, so it's a lot easier to be truthful about it. Because we are a credit product. And so we said, we are credit, and it's our job to actually help these young consumers build their credit scores up. And we found that in our surveys with Gen Z, I say like an Australian, Gen Z and millennials. When we did these surveys, we found that half of these consumers wanted us to help them build their scores already, which is great. And then the other half didn't want us to touch it. And what I say about that half is that's the half we need to educate, because that's what I would be doing if it was my own kid. I'd be like, no, you actually do need to have an impact to your credit score. It's just got to be a good one. So when you use those products, make sure that you use them wisely. And I actually think that's why we're, as a company, such a good product. It feels so good to be behind it because of all these things that we're doing. So we've launched Sezzle Up. That's the one I'm most proud of. And we've also launched Sezzle U, which is the education piece. So if the customer doesn't think they need to build their credit score, let's give them some education so that they can learn about why they should.
So now I'd like to open it up for students to ask you questions. And today we have with us Brittany, Carly, and Malu, who will be joining us. So give a wave, Brittany, Carly, Malu.
Hi, everyone.
Excellent. So Brittany, would you mind starting off our questions?
Yes. So thank you, Charlie, for this insightful presentation. So I have a question for you. So how has your career path changed over time? And what would you say your biggest role that has made the most impact on others?
Oh, wow. That's a good question. I mean, the biggest role is probably, I'll answer that first, is probably where I'm at today. Because I think I've matured in my career and realized what's important. And I think because we're going down this PBC path and doing the right thing, I feel really good about, what I'm doing with my career. But my career, it's evolved. Like when I was in my 20s, I was definitely not the same person I am today. Like I was more interested in Friday and Saturday night and playing video games with my friends and having fun. I was doing a good job in my career, but I think the bar was kind of low in my first job. And so to get success and get high fives, it was pretty easy. And I realized it when I went to business school, because I had to do interviewing for the first time in like 7 years. And everyone was asking interview questions like, tell us a few things that you're proud of in your career. And I'd be like, I've got nothing. I basically had to script an answer for it. And I thought about that a lot, and I'm like, that's not what I want for my future. You're at work a lot and you're spending a ton of time in your of your day at work. Why not do something that's fulfilling? And so that's what kind of pushed me towards challenging myself and starting the first company. And it was so hard. I mean, I cried. I mean, I'm not a person that cries a lot, but we had moments where I thought we were going to die as a company. And that is so scary. I know people say it's okay to fail, but I guess that was a difficult for me to accept, because you kind of put yourself out there on the stage and everyone's saying oh, they're starting a company, that's what happens. The last thing I wanted to do was come back and say we failed. And so there were some moments like that we had. And when we finally got our first investment at Passport, and I could see that we had success on the horizon, that was really powerful. And then, from that point forward, I wanted to start another company after Passport, and people ask you why. And I kind of think the why is like mountain climbing. Like, why do mountain climbers want to climb mountains? Because it's hard and it feels good when you do it. Like when you get to the top, it's like, holy crap, that was hard. And we did it, which is awesome. So that's kind of what drives me now.
Thank you.
No problem. Carly, would you like to take the next question?
Yes. So thank you for your presentation and for your time. I wanted to know, when you were in college, did you always have aspirations of being a CEO, entrepreneur, or did it happen more organically?
Probably not the CEO part, but entrepreneur I thought about. like I'm not like the lemonade stand entrepreneur story from like when I was a kid. I was probably more lazy and figured like like I said, playing video games and being a nerd. But I always thought about like starting companies, and I didn't know the first thing about how to launch them. And I mean, now that I know how to launch them, I think, you know, some of the advice I would give is one thing that entrepreneurs think about that I think is completely wrong is they're always trying to invent a new idea that no one else is doing. First of all, it's almost impossible. Almost every idea has been thought up. I mean, I've learned that over my days. And then second, the most enjoyable part of business is competing. I almost think it's like a tennis match. Imagine playing tennis against a backboard. You just go out there and hit against the backboard. I mean, that's boring. When you have a competitor on the other side, now it's really fun. Like you have a reason to get up and try to figure out how to win. And that's when business gets fun. So my advice to entrepreneurs is sometimes, you know, if you're, especially your first time entrepreneur, find a space that's exciting and on the rise and go do that. Just go do it. And what you'll find is you've gotten rid of 90% of the uncertainty in starting a business, which is, do you have a product market fit? And then even if you're the second comer into the industry, which some people say, you know, you have your disadvantage, I think sometimes is an advantage because the first mover in the space, they blazed the trail. They spent tons of money educating people. And it's also, once they have a bit of success, they have trouble innovating because they're, you know, innovator's dilemma. They're too scared to make changes. And then you're trying to win. And then what happens is you eventually eclipse because you got that different drive. You're trying to win while they're trying to just be stable and just not rock the boat. So you know, if any of you are thinking about becoming an entrepreneur, that's my advice to you. That's how to approach it.
That's great. Malo?
Yes, hi. Well, first of all, yes, I wanted to say that your presentation was very interesting. I have used your Sezzle and it is amazing.
Awesome.
So it's amazing to be here right now. So what would you say that have been the biggest challenges of starting your own company in these times where the marketplaces are all so saturated?
Yeah, so first of all, starting a company is hard. I was probably cocky, brash when I started my first company, and that one got solved pretty quick. It's really hard to start a company at any stage, like any time. Fundraising is the hardest thing to do at the start, and you have to fundraise to build a successful company. You need a great product, you need a great team, and you need capital. And capital at the earliest stages, I think, is the hardest. In today's market, I agree with you. Things are pretty saturated. Like we're at this peak of the economy. Almost anyone that's wanted to start a business has probably gotten some sort of funding if it's got any sort of chance. So I would say the saturation might be your biggest challenge. You know, I think you're spot on. People ask me if, you know, are you worried about someone else entering your space? And I'm not that worried because we are a little bit saturated. Maybe that changes in different times, but I would say I still wouldn't let that stop you. If you're interested in starting a company up, I would still look for the right sector, look for what's rising fast. And then, you know, your biggest challenge is, again, going to go back to the usual biggest challenge, which is raising money.
That is a tricky challenge when you're starting a business, the capital. Brittany, I'm sure you have another question.
So my question is, what is the best and worst advice you have ever received? And what would you tell a student who's entering the industry today?
So best and worst advice. You know, best advice is basically just go after it. Basically go after it. You know what I mean? Like don't go for a middling choice. When you're given like the low road and the high road, take the high road. You know, take the road less traveled. I think you're gonna enjoy the challenge that you see. And what was your second part of your question?
It was the best and worst advice you have received, and what would you tell students entering the industry today?
I would tell students entering the industry today that take the job that has that challenge. Take the So I would say a couple things. If you're entering entrepreneurship, I think now is the time to do it. When you're younger, it's a great time to be an entrepreneur. So if you're thinking about that, do it now. And then also take the job that presents the most challenge because stormy seas make strong sailors. I think a lot of times young professionals go with the big name, like the Googles and the Facebooks of the world. And yeah, they look great on your resume, but will they present the biggest challenge to you? I'm not sure if that's the case. I think if you join like a fast growing company, that's probably the best place for you because you're gonna be challenged. That company's gonna lean on you. They're gonna expect you to help in a bunch of places. And you're not gonna have all the, things won't be handed to you on a silver platter. That company's gonna be hoping that you can help them right out of the gate. And I think if you're a young entrepreneur, young professional, that's the best way to get your career started, is going to a place where you're going to be challenged and want to push forward. That's something I didn't do. Like I did the reverse. I was non-challenging jobs. So I think that I always go that direction now.
Thank you.
All right, Carly?
Yes. Where do you see the future of Sezzle headed after the pandemic?
Well, I think we're positioned pretty well post-pandemic. I mean, everyone, if you look at our stock chart, you can see how people felt about us before the pandemic, right when it started to come into being. A lot of people were worried that no one would pay us back. Of course, we didn't believe that. But what we found in the pandemic was that our intuition was right about our consumer. Our consumer was using us as a budgeting tool. Repayment has been strong for us. Obviously, retail, which is our space, has been pretty hurt during this entire period. So I would say that as a company for Sezzle, we're pretty well positioned because we survived the vast majority of this scary portion of the pandemic. And as it starts to unwind and we start to exit, that's a good place to be, on a strong foundation through the pandemic.
Great, thank you so much. Melo?
Yes. So studying business, we look a lot into DEI, which is diversity, equity, and inclusion in the workplace. Would you say your company has a culture of DEI, and has this been something you have always sought after as a leader of such a big company?
So I think we do have a culture of DEI. I'm not going to say that we were that from the start. I think we had room for improvement as we grew the company. When we first started the company, I almost feel like you have to be, and we still are. I'd say for me, first and foremost is meritocracy. People that are that earn it should get it because they're doing a great job. But what happened for us is we sort of because we had meritocracy as our number one, we became a diverse company. Because that we weren't looking at other things. We're just looking at, hey, who can help us? Who's looking for the opportunity? So on our dev team, we're a group of, our H-1B ratio is high. Let's just say that. We have a lot of foreigners to the U.S. or entering the U.S. type people, just like my dad was entering. We've got tons of H-1Bs, which I'm super proud of. And then more recently, we've made a very concerted effort towards DEI. We started to realize it. Our board, it's something I point out. Our board is all white, and it's heavily skewed towards male. It's hard to change that right away because you don't want to fire people. People are doing a good job. I don't want to we're going to make changes. So it's something we've identified, and we want to make improvements. On our leadership team, we are lacking people of color, but we do have a pretty good split now with male and female mix. And then we also, I think there's other elements of diversity that I think people don't always think about, which is age diversity. So in our company, we've got a pretty good mix of age, which is actually unusual for a startup. A lot of startups start, skew kind of young. It's almost like ageist, in terms of older employees. So I think that's a place where we're doing a really good job. And now it's a concerted effort for us to work on the BIPOC side of things. And so what we're doing is in our people ops department, we're actually recruiting from places where we can find blacks in technology, for instance, is a place that we're pushing towards increasing our funnel. Because I think that was some of the problems we were identifying is it's, like I said, we were a meritocracy. We were hiring the best people for the job, but we weren't recruiting from the places that warranted those types of improvements to our DEI funnel. And so now we're making it a much more concerted effort. We've got a DEI group in the company that's active in our initiatives. And so I think we're fixing a lot of things that we're doing, we're a little bit weaker at the start of the company. But that's not unusual. Young companies, they can't do everything well because you're basically in infancy and you're just getting started. It's now as we're maturing, there's no excuses. You've got to be able to do it all well.
Okay, so I just want to thank you for the opportunity to be here and that we can, able to ask you questions. It's really a good opportunity. The first one I have is that in a Forbes article published earlier this year, Sezzle was named one of the best up-and-coming companies by their employees, which is like an awesome accomplishment. What would you say happened within the company to create such a good relationship between employees? I would say our approach, earlier in the presentation, I talked about stakeholder approach to doing business. And I think that's what drove it. So our key stakeholders were the merchants, our consumers, our team, our investors, and our community. And what we do is we look at reviews everywhere. So like we have merchant reviews. We've got like on G2 Crowd, which is a merchant review site. We've got Facebook and Trustpilot for consumer reviews. Internally, we have a tool called Gusto, which we use as our human resources tool. And we did monthly surveys. How are we doing as a team? Like where do we have weaknesses? And I think if you just keep on surveying your stakeholders and keep on like whack-a-mole on the 1 stars, fix them all, and then celebrate the 5 stars, you're gonna have success. And that's basically what we did. I think with our team, we had these active surveys, we had active feedback, we sought it out. When we got feedback, we fixed it and improved it. And you just keep on doing that month after month with all of your stakeholders, and you're gonna win. And that's I think what happened with our employees. We just did such a good job of focusing on getting those reviews to the top that we became a great place to work. That's awesome. Glad to hear that. Oh, thank you.
That's great. And we actually study a lot about DEI in our course. So it's great to hear live from the industry. I think Haley might have one more question for you.
I do. Okay, so hearing that Sezzle will match an employee's contribution to the charity displays incredible social responsibility and care. How does that make you feel as CEO, knowing that Sezzle has grown so much to be able to help out employees and other organizations so generously? I totally love it. I think that's one of the most fulfilling things. So we were talking about, what are you proud of? And I said the impact at Sezzle has been the greatest. At Passport, my prior company, we were just like a feisty group of entrepreneurs that just wanted to win and crush everyone. And I didn't think we saw the big picture, which is like, that's so silly and short-sighted. And you can't even destroy your competitors. It's impossible. I say only they're the only ones that can destroy themselves. Mm-hmm. And so at Sezzle, I know I've grown up. And so we realized, let's make it something that we're proud of in the long term. And so doing all of these, positive things is what makes you feel good 10 years from now when you look back at that company. Absolutely. Like, we did all these good things. I'm proud of what we did there. Absolutely. That's awesome.
That's great. Thank you so much. Thank you for your generosity with your time and answering all of our questions. It's been an amazing experience. And Fashion Institute of Technology is greatly appreciative of your work and collaborations with us. I know the students will be greatly benefited from the work that they're doing, not just in this case study, but also learning from a real live CEO in the industry, and your insights were really terrific. So thank you.
Thanks for having me, Shelley.